You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time, once again, for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the old Options Insider Radio Network. We got a few shows for you to check out in case you're tuning into us for the first time. Of course, you can go deep into the archives of Volatility Views. We got some great episodes in there for you guys to check out, some great guests, some great debates, some great discussions on some great volatility topics. You can find it all there. Just peruse through the archives. It's almost like, Wheel of Fortune. Just spin the wheel, pick an episode, hit click, and you're off to the races. The easiest place to do that, of course, the website, the mothership, theoptionsinsider.com. While you're going on a Vol Views journey, some other shows you guys might want to check out as well. Of course, Option Block, as well as TWIFO, one of the new additions this week in futures options, if you like, particularly the commodity volatility segments that we talk about here kind of at the end of the volatility review every week. We have a whole show kind of devoted to that stuff, and that is TWIFO. We get into movements and skew, not just overall, but how the put wing and the call wing evolve independently of each other, the implied vol, as well as interesting underlying developments and all sorts of cool activity in the futures options. There really is no other show like it. It's kind of interesting. So if you're interested in that neck of the woods, maybe gold or crude or soybeans or whatever is lighting it up that week, FX, check out TWIFO. I think you're going to like it. And of course, you can find all that, of course, also via the usual outlets, iTunes and TuneIn and Stitcher and wherever they call Stitcher. Now they keep changing the names over there, as well as Google Play Podcasts. And if all that's too much, you just want one consolidated place and you want to do it on the mobile, well then, our mobile app is the place to go. Options Insider Radio Network. Search for it in your app store of choice, and you can get all that goodness there as well. Cool thing, too, about that, you can also download the shows for later listening. So let's say you're going to go on a plane or something, you want to download, hey, that episode of Vol Views where they debated about that crazy topic. Well, you can do that and then listen to it at your leisure. We just want you guys to tune in. We don't care how you do it. And, of course, while you're tuning in, while you're streaming, of course, I always forget to mention, we do stream this show live every Friday, noon Central, 1 p.m. Eastern. So if you are so inclined, you can join us via Mixlr, Mixlr. We tweet out the link, so follow us on social media. We put it on the website, too. We also, of course, if you just sign up for Mixlr, you can follow us. It's kind of like its own social network in and of itself. So you sign up there, you can follow us there. You'll be notified instantly when we're going live. Click on the listen button, and you're good to go there. And, of course, you can send in questions that way. We love to hear from you guys. But you guys really, at the end of the day, you're the reason that we put on this fine program. And joining me on the old show today, let's go in, well, actually, I don't know technically who's farther because they're both pretty far today. So I guess I'll start in order of proximity to the edge of the continental U.S. That means we start off first with the Rock Lobster himself, Mr. Andrew Giovinazzi, beaming in from that Grand Duchy, just steps from the ocean there known as Maine, by way of a little land we call ye old Option Pit. Mr. Rock Lobster, welcome back to the Volatility Views program, sir.
Feels like it's been a while. The last time I was here, there was actually volatility in the volatility.
Yeah, we were above a 20 handle, I believe.
I think so, and we ain't no more. But more on that later. I don't want to give away the show.
That's it. You gave away the whole show. We are now done. Thank you, ladies and gentlemen, for tuning in today to Volatility Views in our 4.5-minute episode. All right, and also joining us, he's not usually in his typical corner office. He's in his remote digs, where he is beaming in from, I believe he is in Oklahoma today, but we'll check in to make sure. He is typically corner office, this time just the senior instructor over there at the Options Institute, Mr. Russell Rhodes. Mr. Rhodes, where are you beaming in from today, sir?
I'm at school. I'm in Tulsa. And you know the best thing about the building I take my classes in here in Oklahoma? There are 2 targets for Pokemon Go associated with this building.
You can go out there, catch them all, baby. We were talking about that on Option Block, but it might as well spill over into every program on the network because you got to catch them all.
Of course.
I mean, Chicago is a great little hot spot for my little guy's been catching Pokemon hither and yon and battling at gyms. And now, of course, you can do it apparently in Tulsa as well. Who knew? Tulsa, the hot spot of Pokemon. Catch a Pikachu in Tulsa or whatever. I don't know what a T-named. That's not the only Pokemon I really know. I don't know what a T-named Pokemon would be, but catch a T-named Pokemon in Tulsa. There you go. That should be their summer tourism slogan. They get a lot of business, I think.
Oh, it's even better this weekend. There is Tokyo and Tulsa, which is a anime convention going on at the same time. It's all kinds of crazy.
So you've got all the spillover there, all the worlds colliding. Volatility, volatility, Pokemon, and anime, all in the mecca that is Tulsa. Wow. I bet you, Rock Lobster, you're reconsidering your previous stance on Tulsa now. You're like, maybe I should have moved to Tulsa. I think you're thinking that.
I think, there's a lot more action going on there. Russell's he's upset the apple cart over there, I think.
First, he hits the volatility hotbed that is Kamloops, and now Tulsa, Oklahoma, baby. You're just hitting the epicenters of all things volatility. Speaking, and sounds like the epicenter of all things culture as well, which is Tulsa. Speaking of epicenters of volatility, let's get right into it. It's time for our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
Welcome to the Volatility Review. This is indeed the portion of the program where we break down what's moving, what's shaking, what was rocking, what was rolling for the week that was and indeed still is, from volatility trading and analysis and research and just trending developments perspective. We are recording this and streaming it live, like I said, Friday, right about noon Central here, 1 p.m. Eastern. So getting a little bit of action here in the day, mild sell-off here to kick off the session. Most of the major indices off about 0.3 of a percentage point or so. Dow, a bit of a laggard to the downside. It's functionally unched on the day, and that means all this little bit of red on the screen means VIX Cash inhaling a little bit going into the weekend. We had talked on previous episodes about how it seems like, around the 13 to 13 half handle was a bit of a near-term floor, it seemed like, for the VIX Cash. Well, we broke through that earlier this week, and now we're kind of getting back to those levels right above the 13 handle. Again, 13.14 out there. So it has been an intriguing week from a volatility perspective. You kept saying to yourself, how low can it go? We got so many unknowns out there. We got earnings season kicking it off. Maybe there is that floor around that level. And as it is wont to do, the volatility market and the volatility traders, they like to surprise you to the downside. They say, nope, it can go lower. And we broke through that 13 handle this week. Who knows? We might even get back below that again before the end of the day. But since it has been a while since you've been on, Mr. Rock Lobster, in fact, we were trading 12 and a quarter, printing 12 and a quarter earlier today in the session here on VIX Cash. So interesting week so far. And speaking of interesting week, Mr. Rock Lobster, it's been a while since you've been on. As you mentioned the last time you were on, vol was comparatively meteoric, stratospheric, call it what you will, much higher than it is today. So a different regime entirely. But that said, what's catching your eye here in this first earnings week and from a volatility perspective?
From a vol perspective, you're seeing kind of normal pattern where you go into earnings, vol might be a little elevated, from wherever it is. And all of a sudden the earnings come out, financial earnings are pretty good, kind of bellwethery stuff. Okay, we have some technology next week, and the vol just kind of slowly leaks out. So I think as hard it is but I think you're kind of getting back to sort of normal bull market-y, not much really going on, but not much bad stuff. And the market is just painfully average for volatility right now. Although I think the 12 handle was cheap. I even think the 13 handle's cheap just because with the ease that the market has been able to move like 1% a day on some of these rallies for really nothing. I still think there's that pent up demand, so to speak, has not really been sated, even though we're trading around 221.60 in the SPX. So I think volatility actually is relatively cheap, but doesn't mean it can't get cheaper. I would not be surprised to see the 11 handle after the Fed does whatever they say next week.
Yeah, the old Fed. All of a sudden, they're back in the conversation. They were the big news for a while. Then Brexit kind of stole their thunder. Then all of a sudden, people were starting to price in some probabilities of actual rate cuts. And then we have this kind of non-farms number that just changes the game yet again. And now all of a sudden, cuts are gone, and there actually is an inkling of perhaps a raise. Even though you look at the global macroeconomic perspective, it seems kind of ludicrous. But that never stopped the Fed before it did it from doing something that appears on the surface to be somewhat ludicrous. So here we were just a few days ago, Mr. Rock Lobster, and leave it to you to come in and spoil the party. Just yesterday on Option Block, we were celebrating how we were kind of back focusing on the micro, back focusing on earnings and things you could kind of really sink your teeth into, rather than the yin and yang of the Fed or the various nonsense going on internationally that's impacting global economies. We could focus on something concrete for a change, and here you are once again invoking the Fed, sir. For shame.
Not too bad, 15 minutes of the show, and I created Umbrage. Umbrage has been created already, 15 minutes into the show.
I'm going to have to renew your ban, send you off again for another couple of weeks to think about what you have done. While you do that, sir, let's bring on the Rock Lobster. Kind of an interesting week. You just had the Rock Lobster. Bring on the Corner Office, formerly of Corner Office fame, now of Tulsa Anime Convention fame. It's been an interesting week, as we were just talking with the Rock Lobster, Mr. Rhodes here. Too many R's on the show today. It's throwing me for a loop. But, it has been interesting to watch. We were talking, I think you and I were talking last week about how, it seemed like 13 half around that level seemed like a reasonable floor. And as we have kind of joked about many times on the show, people are not reticent to crush things beyond levels that we perhaps here think are suitable. But hey, that means buying opportunities, right? But that said, it's an interesting week, kickoff to earnings season. Some interesting stuff perhaps on the radar. What caught your eye in this week's trading activity, sir?
Well, we had earlier this week, we had 2 days in a row where we had SPX and VIX higher at the same time, which basically gives you a 50-50 outlook on the next few days in the market. So it's really exciting to look at, but it doesn't really tell you a whole lot going forward. The other thing that's kind of caught my eye is I think the July futures, which settle next Wednesday on the open, they're still well over a point above where VIX is. So, the futures guys aren't totally buying the low VIX, or not. Buying is not the right word to use there. They aren't actually, they're not believing. Thank you. There you go. Believing. So just, I got to go catch this Pokemon.
You can tell us right now. You're in some cosplay for that anime convention. Who are you dressing up as? Are you a little Japanese sailor girl? Who are you dressing up as? Oh,
you know me so well. So no, I'm a Betty Boop kind of guy. I'm old school.
Old school. Wow. You might show up at that convention and scare some children. Daddy, who's that horrible man lady who no one recognizes?
Sebastian could have done so much with that. I really could have spun that in like 8 different directions. I really. But sorry, this is a family program. Never mind. On we go.
Before we offend the censors, we're going down that road. The notion of Russell cosplaying is an amusing one to say the least. Looking at some other indicators, excuse me. You mentioned the VIX futures elevated. That certainly is something interesting and worthy of note, and it's something a lot of people have been watching of late, kind of playing that guessing game. When will the two coalesce? When will they come to some sort of reasonable meeting point in between? Haven't hit that yet. We've got a week to go. We'll see how that shakes up. Looking at other indicators again, we like to talk about VVIX, which is, of course, the volatility of the VIX, the volatility of volatility. I know it's an obtuse concept, but once you wrap your brain around it, it is pretty useful. I think we had a listener question last week or the week before saying, why do you bother disseminating this nonsense? It has some utility to it. And looking at it today, we're at about a 90, 91 right now. So elevated, but still on the far off the recent lofty highs that we saw not that long ago, coming out of the heels of a post-Brexit and Fed and all that kind of madness, when it was printing, 125, 130, 132, I think is about as high as it got. So those were kind of just extraordinary, crazy levels. But we're also not way down at the bottom of the trough either, not in that, 70, 75 range where it kind of seemed like it was vacillating around for the better part of the beginning of the summer, where it seemed like, not as much was going to happen. Maybe we had some summer doldrums, and then, of course, Brexit kind of woke everyone out of that fear. But still interesting stuff. So still slightly elevated, but nothing too, at least not pointing to anything too scary on the future. I don't know, Mr. Rock Lobster, what's your read of that current 90 level out there in VVIX land? You think that's they're kind of playing wait and see out there as well, where it's not really crushed completely, but it's not elevated kind of either. It's kind of in that weird kind of middle ground right now.
I think that's a good way to characterize it. It's a little tweeny. They're okay. Britain leaves the EU, everybody panics, and they all, I learned this early trading, sometimes you just got to go walk outside and see the sun is shining and then things aren't so bad. And then you walk back in and get some perspective on, what really is going on. So, the phrase is, you step out of the pit for a few moments, because sometimes it was easy to get kind of caught up in the moment. You're really not you're not concentrating on kind of the big picture. I think volatility in the VIX is probably still one of the better indicators for market sentiment. And right now, I think the sentiment of the market is, while the stocks are going up, which I don't think everybody quite is believing it, they are not quite ready to give up the ghost on implied volatility. However, it is still, it's still in the very low. It's in the lower end of the I don't know, I'm not sure range. Meaning, it's a step away from falling off the cliff and hitting the high 80s or low 70s, or the low 80s and the high 70s. It's just very close to that.
Yeah, it seems like it's poised to go somewhere. It's like, the bouncer at the end of the night at the bar. You can't stay here. You got to go somewhere. I don't think VVIX is going to be hanging out here for long. It's going to be retreating back into its summer doldrums levels, or it's going to get another sharp shock to the upside. Maybe earnings season will do it. Maybe your friend Miss Yellen will do it. Maybe some unknown ramification of Brexit will do it, or some other horrible international event. Either way, maybe some combination of all the above But it doesn't seem like it's going to be hanging out here at these levels. That's just kind of the way VVIX seems to roll these days. Speaking of rolling, let's roll right on into my favorite transition of the show. It's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
Still brings a chuckle to my face after all these many episodes, many months. Of course, Russell's Weekly Rundown, the portion where Russell breaks down his favorite cosplay from the Tulsa, Oklahoma anime convention, and if he has time after that and is so inclined, maybe breaks down a few weekly VIX options trades as well that caught his eye. Have at it, Mr. Boop.
Well, it's a very difficult time to talk about the VIX Weeklies because next week is standard July expiration. But there were a couple things going on today. Somebody was buying. They bought about 3,000 of the July 27th, the weeklies that expire a week from this coming Wednesday. They bought about 3,000 of the 15 strike calls between 85 cents and 90 cents. So I'm like, oh, and the open interest is very close to 3,000. So I went back and looked at what they had done. And what they did was they sold about the same number back on July 6th. So 3 weeks ago. And they, or not 3 weeks ago, a couple weeks ago. And they sold them at $3.12. So that looks on the surface like a really good trade. But when they sold them, they actually did it as part of a spread trade where they took in $2.42 per spread and they had bought the 23 calls. It looks like they're leaving the 23 calls on. So we get some sort of volatility spike between now and a week from Wednesday. They may be volatility geniuses that we need to get on the show. The other thing, it looks like somebody had back on July 1st had sold the 22 strike calls just outright and taken in, I think 70 to 85 cents, something like that. I forgot to write the price down. And it looks like they covered those 1,000 today at 15 cents. So a couple of trades using weeklies where they're taking profits with VIX at low levels right now.
Yeah, it has been interesting and just engaging with some of our listeners via social media. We got Rami saying he likes the fact we're talking about VIX futures being up elevated, but he says the VIX not a good reader of the market right now. I'm not sure what he really means by that. Maybe he has some alternative index or measure. Of course, he could also be saying kind of like what we were saying now here on the show, that it's just kind of just cheap right now. We're kind of waiting for the other shoe to drop. Speaking of shoes dropping, it was an interesting week overall in the VIX mothership options complex. A fairly hefty week, maybe Tuesday notwithstanding. Certainly yesterday, seeing some pretty robust paper out there. Nearly, not about 900,000, not really close to a million, but not hitting that million mark yesterday. But a pretty active day yesterday, and about almost 500,000 going up on good old Wednesday, about 233. So the quiet day of the week coming on Tuesday, and Monday again almost about that 500,000, 461 to be precise. So it is funny to say things are quiet out there when this product's still putting up numbers that would shame or just amaze pretty much any other product out there on the planet right now. I can't think of many others, outside of maybe Apple on a good day and some big index products out there that can push close to 1 million contracts on a given day, let alone exceed it. So yeah, these are numbers that are still pretty crazy. And today so far, looking at here, like I said, we're selling off a little bit out there, and so far, nothing volume-wise to really write home about 330,000 contracts having gone up so far. ADV still hovering around that 600,000 and change level, hasn't really moved that much over the past month or so. Looking at some of the paper, excuse me, that's been lighting it up out there with some interest. Looking at the AUG, saw some AUG verticals, looks like going up today. In particular, it was the AUG, looks like AUG 2732 half vertical going up. Looks like paper buying about 13,000 and some change here. That's kind of the bigger trade of the day. Also saw, I guess you can kind of call it a number of different things. Looks like a bit of a funky time collar. You don't see a lot of collar activity going up out in VIX land very often. So that's interesting in and of itself. The fact that there's a time component to it also kind of interesting. Also the fact that it's a bit of a ratio. So all of these are kind of interesting. Looks like someone gobbling up the 7,000 of the AUG 20 puts this morning and then turning around and selling about 10,000 of the SEP 30 calls. Doing it a little bit backwards the way you normally do a collar as well. It's kind of fun. I don't know. I'm trying to think of a good use case for a collar out in VIX land. I don't know, Russell or Andrew, you guys, we don't really see this print going up very much out there in VIX. When was the last time you saw a size, what we would typically think of as a collar going up out there in VIX? Probably been a while, right?
Yeah. I mean, I'm sure you do them. Did it go up tied with futures? I'm just looking at the trade. Yeah, well, you know why? It's because the product is it's the opposite, I guess. A collar in VIX is,
yeah.
I guess it would work. It obviously, if VIX keeps going down, it works well. But on the face of it, I guess you just want to be shorter, which is fine. If you're somebody that's, long $5 billion worth of, treasuries, you probably could put that on and be quite happy with it. So, yeah, but it is kind of a funky, you sell the 30 calls for 55 cents. I don't know. It's a long way to wait for the 55 cents. That's all. So it feels like it's got to be written against something.
Yeah, there's obviously some other component here that we didn't see go up right away. Obviously, kind of right before the show went up, so you didn't have time to really parse it too much. But you're right. It seems like there's a component, obviously, here that we're missing because a traditional collar doesn't make that much sense out there in VIX land compared to traditional equity because you're right. VIX is kind of the opposite of what you typically think of for a lot of things. Also, the way the time and the ratio is structured, it probably should be maybe the other way, certainly on the time side. But c'est la vie, we've seen weirder things. But still, this one it seemed sizable enough, but also funky enough to be worthy of note. A funky time collar. That's what we're going with. That's the name. Funky ratio time collar if you want to make it really fun. So check that one out, listeners. Maybe give us your thoughts. Why would you trade I'm going to actually put it out there as a funky VIX collar using the official terminology. And then we saw a lot of other interesting prints. So Thursday, like I said, was the kind of active day of the week with about 900,000 or so contracts going up. Also saw what looks like could be another a similar type trade. They all went up splits on mid-markets. Was kind of hard to dive in and see right away at first glance, but about 25,000. It looks like the September 1430 collar may have gone up, or it could have been a strangle as well. Got to dig in a little bit to where they executed that up. About 25,000, 50,000 of those 900,000 contracts going up in that as well. Also, looks like maybe a bit of a short straddle there on the AUG 16 strike, perhaps a combo with the 18 calls on the upside for a bit of a kicker / protection should the worst come to pass. We all know if you're looking at VIX where the danger is on those explosions to the upside. So perhaps lighten up some of those 18 calls just in case. Just on the off chance that short position not exactly working out that well. Doing that 20,000 times as well. So 60,000 contracts going up on that one. Also saw some perhaps funky SEP straddles / combos going up there about 10,000 on the SEP 19 strike as well. So some interesting paper all the way. Of course, on the day when you got nearly 1 million contracts printing, there's a lot of interesting stuff. Kind of hard to see sometimes the forest for the trees or perhaps the tsunami of volume that is heading your way, but still interesting stuff. We've been talking a lot, too, on the show about the resurgence of VIX puts of late. VIX puts have been actually active for a interesting thing to note here. We've talked about just in the top 10 how often VIX puts have been lighting it up in the top 10 on our show of late. So interesting stuff. And again, that kind of strike du jour, the put du jour has been the July 16 put, lighting it up again on Wednesday. Paper dumping about 20,000 of those for about south of $2, about $1.83 or so. So a lot of interesting put trades. The July 15 puts also going up. Looks like a spread. The July 13.5-15 put spread. Paper buying the 15s, and looks like also maybe a bit of a stupid actually, buying the 13 halves as well. Lifting offers on both of those, so a lot of funky stuff. Russell, I know you've been digging into some of these trades, and you're thinking that some of these went up with a VXX. That's the missing leg we weren't seeing.
That's like you mentioned, I've been in Canada and now I'm chasing Pokemon and cosplay people around Tulsa. But when I'm there, and I see something like that doesn't make a whole ton of sense, I'm fortunate that I can just go down an escalator and talk to guys in the VIX pit. And when I'm down there, I do hear trades called out combining VXX options and VIX options. So Andrew's correct. Sometimes these things are tied to futures, but sometimes these things are actually tied to VXX. What I was doing was I was digging through the time and sales, and I don't see anything that went up at the same time as that funky time spread backwards collar that you pointed out.
That's a good point. We don't really think about that. We always think about, obviously, the obvious tie is to the futures. But yeah, a VXX tie does make a certain amount of sense. And it certainly, I'm sure a lot of the institutional clientele out there want to trade tie to something else. VXX, we typically lump that into, the retail barrel. But at the end of the day, it does tons of paper. So clearly there's a huge institutional crowd slinging that one as well. And certainly there's a lot of back and forth between VIX and VXX from a trading and ARB potential out there. So it makes sense. You might want to come in and tie it to a VXX. Kind of interesting. I don't know, Mr. Rock Lobster. Do you take umbrage? I know you pretty much anything that includes a VXX leg, I think you take a little bit of umbrage at.
Well, the thing we just tell clients, we just make sure that you understand that VXX is reliably crappy, meaning for the most part, it's going to fall apart until those couple days a year where it doesn't. So, and it would make sense. You would need to be long a combo in VIX to pay for all the annihilation that you're going to get with VXX, because the puts were pretty much in the money. So, maybe they're trying to backspread a pretty decent sized position, create like the 20-30 backspread. I could see how you could do that. And then you would peel off your VIX puts as, if we stayed down deep into the 12 handle, through the cycle, I could see how that trade could work. And you could pick up, you're losing the decay in VXX, but you're picking it up with your VIX puts. So, maybe that's just a smart guy trade, and they figured out what all those decay profiles look like. So yes, I could see that. Do we take umbrage in VXX? I hate the product, but I love the product, because if I didn't have the product, we wouldn't have all these great vol products to trade. But I think a lot of people just use it incorrectly. So that's why we had the edumacation service we have. And, and then Russell wrote a couple books like, hey, this is how this works, everybody. Pay attention.
And just for all those out there who want to know, what the proper use case is of course, buy VXX and then put it in your IRA and set it and forget it. That's just the easiest thing to do. That's our recommended use case for VXX. Hopefully you find and hear the little bit of irony perhaps floating around in my voice. All right, moving on to what's hot out there, what's been lighting it up this week from a VIX options perspective. The top 10 hot strikes out there in VIX land right now. And interesting enough, kind of like I said earlier, kind of the narrative of the past month or so, kind of no surprise given the VIX apocalypse we saw a few weeks ago, has been kind of the resurgence of VIX puts. Takes a lot to give VIX puts a bit of a bump, as we were joking earlier. VIX kind of a backward product, all calls all the time. And the apocalypse and kind of this vacillation down here now around the low teens level has given puts a new life. We were saying last week, I think about 4 or 5 of the top 10 were puts. Not that heavy this week, but still a lot of puts creeping up there. Of course, number one still with a bullet is the ever optimistic July 30 strike. Every week that goes by now as we approach expiration, that strike just seems more ludicrous compared to just a few weeks ago when it seemed reasonably close. And now all of a sudden 30 just seems like a distant and kind of silly memory in hindsight. Number 2 is now what I was talking about earlier, that strike du jour, July 16 puts. Number 2 with a bullet. Still a lot less than number 1, only 261,000 contracts, but good enough to be the number 2 slot on a very active product during a pretty active week. Number 3 also, so top 3, 2 of them coming on the put side, the July 15 puts. Those two, the July 16 and 15, have kind of been neck and neck for a while. 211,000 contracts open there, so lots of love on the put side. Number 4, the July 23 is a lot more reasonable. July 23 calls, 206,000 open there. Then we drop off a cliff again to the number 5 slot. July 25 is 175,000. Those bad boys open. Then we find our last put here on the list, the July 17 put. So that whole strip, 17 down to 15, fairly active with about 171,000 of those bad boys lighting it up. Number 7, the July 22 calls, 165,000 contracts open. Number 8, the July 28s. About 150,000 contracts of those bad boys, about the similar number of the July 26s, and then rounding out the top 10, 147,000 of the July 27. So the call strip rounding out the top 10 there with about 147,000 of those open. Total about 8.12 million open, about 5.5 on the calls, about 2.7 or so on the puts. So getting pretty hefty from an OI perspective. Of course, we'll see some of that come off fairly soon. So that's interesting stuff in and of itself. A lot of other interesting stuff here to carve out here on the show. I'm not sure if you guys saw this interesting stuff. There was, I think Barclays put out their breakdown of what they're terming the best volatility trades that went up in June. They actually put out a pretty interesting and detailed graph. We can't go through all of it here. If you want to see the whole thing, I think it was a Value Walk over there. Mark Mellon, those guys actually wrote up a good write-up about it. You can go find it over there, listeners, and see the chart for yourself. But they have, looks like about 25, 30 different strategies. They break down SPX variance swap, SPX straddles, hedged, unhedged. It's a pretty detailed approach to how their various strategies and indices returned both in June since 2007. They actually have them all the way back to 1999 till now, so kind of lifetime returns. It's a pretty interesting read. We can probably spend that's the better part of the rest of the show just kind of breaking down this chart. But they had some interesting takeaways here on what worked well this over this past month. Excuse me, the June month here. There was, like I said, there's so many to break down here, but they were looking at pretty much a 2-month VIX put spread. VIX put calendar actually was a big loser, down about 8%, due to the term structure out there. And also some interesting, they have some recommendations going forward, which I think was kind of interesting as well. We're going to put the link to this article in the show notes, listeners, so you guys can kind of look at the whole breakdown for yourselves. The recommendations going forward, 5 what they're terming systemic volatility strategies you may want to consider. One of them is number 1 is the enhanced SPX variance swap. I'll have to dig into the nuances a bit to see what makes it enhanced versus a traditional variance swap. Looking here, it has a little bit higher Sharpe ratio on their graph. I'll have to dig in. It's got the same Vega as a variance swap and SPX and everything else. I'm not sure what the enhanced portion is, but either way, it's making it the number 1 recommendation. Then they're saying short SPX, looks like 1.5 month straddles here. Some of their notation is a little bit obtuse. Then number 3, the short single stock delta hedge straddles. They don't say which single stock they're going to delta hedge on, so I guess that's up to you. Unless that's an index perhaps they have here in the Barclays offering. I'm not sure. Number 4, short market neutral VIX variance swap. And number 5, short, it looks like SPX here, long, I believe that's V stocks here on some sort of, they don't say how they want to do it, if it's just with the futures or with some sort of options, kind of a hedge and neutral strategy. But that's their kind of number 5 pick. You guys, there's a lot here to parse. It's a very dense list of strategies and a very, very dense breakdown. But maybe any particular strategies leave off the page at UA, and B, how do their recommendations, how do they sit with you? Mr. Russell, I think we'll start with you. If you can tear your eyes away from all the ladies in various cosplay outfits running around Tulsa, what's catching your eye here in this pretty comprehensive Barclays VIX strategy or volatility strategy breakdown for June?
The reference to everything that went on in the EU at the very beginning is I'm actually reading it as you were talking, and I thought that was pretty. That the potential volatility in the EU versus the US was was an interesting play in my mind. That was the first thing, and then I like that they mentioned that correlations were odd in June. No kidding.
That gets the duh moment of the year.
But that comes from somebody whose job is trying to come up with things to talk about and spends every day looking at these things. So, I say that, but that's probably a lot of people saw that and thought, well, that sounds interesting. But I was kind of, I just saw that and thought, well, yeah, but I spend too much time with that. That's why I got to get a hobby like Pokemon.
Yeah, I saw you tweeting some VIX charts on Saturday. You said something along the lines of, "This is what I do on the weekends. I put together VIX charts," or something like that. If that is the case, sir, maybe you do go out and catch a few, just to get some walking in. You know, it's good for the health, good for the lung, the old constitution. I should mention here they were breaking it down, and they do say that their winner for June was their short S&P short-term futures index versus the VStoxx short-term futures as well. So all short-term in that sense. Not a surprise given what we saw happening out there with the Brexit, that would be kind of the winner. That also, I believe, is what their number 5, that's what their number 5 recommendation is, I think, going forward as well. Mr. Rock Lobster, again, a lot to parse here, but anything kind of leaping off the page here at this very, very dense breakdown of kind of all things volatility for June?
Well, one is I think that's a good resource for the average investor. You look at that. So first, the average investor looks at that and goes, "Huh," right? Because there's so many things to look at. Then I look at that and I see they're going forward their recommendations. I would not call that your standard vanilla list of tradable products on the CBOE. I guess we could go through that and try to make some of those type of things. Short SPX 1.5 month straddles. Okay, see that. I just find I find it an interesting collection from strategies. And I think one thing that they point out a little bit is, when market volatility is high, I've always found it better to kind of own. You find ways to own volatility because generally vol's high, but the realized vol seems to be so much higher. Because things have moved so big, like VIX was from 20 to, 14 or 23 to 15. It's such a massive relative move if you could trick up the way you structure the positions. So it makes sense. Like we looked at kind of long straddles in VIX into this thing, and it worked out really well. Long strangles, you just got to make sure, like when you close stuff, you do stuff when the market moves in a certain direction. So while I see Barclays thing, and I know it looks like a great advertisement for a little bit more complicated volatility products, you still can get by very happily on the vanilla products and recreate that stuff. Save, I guess they're just short some SPX straddles, I guess, in number 2. But I like the idea of the ARB a little bit as far as shorting SPX and then long Eurostoxx vol. I think that, they're shorting SPX, but they're long Eurostoxx volatility, I think, is what it looks like, which doesn't look like a bad idea, although it seems like I look at something like that and I go, well, I'm short the U.S. and granted we've had this huge run up, but I'm not quite sure I want to short it. And now you're shorting against long volatility in Europe after the events already happened. I'm not sure I want to own a ton of that. So it's almost like I want to do the flip flop of that. But doesn't mean they can't be right. I could see a vol arb maybe where you buy U.S. volatility and sell European volatility, and you control the contract count or something like that. So I see it. I could sit down and I could really pick away at it. But those are the first 2 things that really came to mind. One is the esoteric nature of all the stuff, their top 5. One, I'm not quite sure I want to short the U.S. and be long Euro volatility now.
Yeah, I was thinking the same thing. I would not have that on my top list of recommendations going forward right now.
Maybe 2 weeks ago.
That's like recommending the VIX short 1x2 after the thing's popped, 20 handles, a little bit too late. The horse left the barn.
So but it's good they put this stuff out, because actually what we do in Option Pit a lot is we get these things, we take the recommendations, and then we parse them. And as an instruction thing, we go through them and say, okay, well, if you put this on, then this is going to happen. If you put this on, then that's going to happen. Do you really like that? And then, my students go, I don't know if I really like that idea. I go, well, there you go. So, I'm glad, but it's, it's like all stuff that comes out of, all the big bulge bracket firms. Some of it's interesting, some of it's not, but you certainly have to know what the heck it is. So, but I like the fact that they stick all those. It's a great resource for this is the current volatility universe. Do you understand it? I think as a teaching tool, it's very good. So putting the link on there and having people access it and say, wow, can you look through these things and really understand if market volatility does A, B, or C? How are these structures really going to react? And what do you think about it? So it's certainly a good tool for that, but as far as just diving right in and just gobbling up all these recommendations, I would cast a slightly wary eye, let's say. A little bit of my one wary eye. I would cast it upon.
That one wary eye, you're right. It certainly gets the points for comprehensive breakdown of strategies. There's not too many I can see out here, except maybe the aforementioned 1x2 that is not detailed in this breakdown. But I know, Russell, you've been digging through the nomenclature here a little bit, and you had a few interesting findings. What's catching your eye over there?
Well, actually, that trade they're talking about with short SPVXSP, which is an index, that's actually one of those indexes that VXX is basically replicating. I think they have a little bit different ticker for the VXX index, but those two, short that one and long the European one. What the European counterpart, which is also focusing on the front 2-month VIX futures, it might be more of a recommendation that has to do with the current shape of the curve. And if the curve's flatter over in Europe than it is here right now, that might be a thought behind it. Again, I haven't been able to dig that much into it yet, but that's just a secondary thought there.
Okay, I could see that as a curve flattener then, if that's what the thing is.
It might not be just the relative indexes, but again, I'm not even looking at the curve when I say that. It's kind of like you guys, you and Mark, throw a couple of things out there that might be behind it and then take it from there.
Right.
That's the fun of the show. We take little nuggets and we spin them into a very, very long volatility conversations, which is kind of interesting. Speaking of which, we're kind of running along. We've had some good conversation. I want to make sure some of our friends here get some love on the show. Actually, really quick before we do that, since we are kicking off earnings season here, it's kind of just the beginning. We kind of just had the financials kicking it off this week. I know, Russell, you look at a lot of single names. So does Barclays, apparently, even though they don't name which single names you should be trading the vol on. But that aside, any kind of earnings related volatility catching your eye this week, Mr. Cosplay / Kamloops?
Nothing's catching my eye this week because it was a pretty quiet week. I was surprised we got the positive news so far out of the big financials, but we've got Bank of America, Goldman Sachs, and Morgan Stanley reporting next week. We've got, like 60 or 70 companies with weeklies reporting next week. So there will, it seems like because of the 4th of July holiday, second quarter earnings always seem to be more concentrated into a shorter time period. And actually, I meant to mention earlier when we were talking about how low VIX is right now, I think the biggest lull for VIX just about every year is early July because of, we tend to have a holiday in there. And then after we get the employment number, it's a little while till we get earnings. So that may have influenced low VIX. I think that's what I was thinking when we got, I think, our record low VIX since the great financial crisis was in July a couple of years ago. A year ago or a couple of years ago. At my age, they're all starting to run together. It was either the year I dressed up as Daffy Duck or the year I dressed up as Betty Boop the first time.
Yeah, when Betty Boop is your go-to, then you know you're revealing your advanced age. I don't know, you really quickly, Mr. Rock Lobster, anything catching it up, lighting it up this week in the pit chat from an earnings, volatility trading perspective?
Mostly, I just think it was funny because they were pricing earnings volatility really cheap in the financials. So it's like the market, you could buy 1 month volatility, 2 month volatility, and pick up the earnings cycle, and they're not charging you anything for it. So to me, that looks like a bargain. And full disclosure, I bought some of it because I just couldn't help it. So it's made a little money so far. It hasn't been anything close, but we got a long time for it to run. But it seems like the market is totally discounting the fact that the financials can move, and the vol looked very, very blasé. Just I shouldn't, the wrong word. Just there, it's low. It's pretty low considering. And you have good earnings and the market hasn't been expecting much. And usually that is a recipe for, okay, you got really low vol. All of a sudden the expectations change just a little bit on the upside, and then you have some room for things to move. So anyway, I thought that was the idea. That was kind of one of the key things in the pitch chat. We actually started looking at it last Friday, and obviously this would have been a good week to catch that. So that has been kind of the standout as far as that goes. The other thing is just volatility in gold, volatility in treasuries. The rest of the market has recovered. The equity market has basically blown off everything else, but gold and the treasuries are still trading at kind of, not even anywhere near the tick on the day of the Brexit when they just, bonds and gold got crushed pretty good. We're not even close to that level yet. So, that I haven't seen that leg of the table has not come in yet at all. So, but it's now it's nowhere near the highs that they were, and they're starting to soften. And I think it's harder for people maybe to come up with a reason to buy gold or buy treasuries here right now. But, then again, it's confounded everybody this year by continuing to go up. So I think that if you're going to see volatility, you're most likely going to see it in those types of products, like the gold, all the kind of the panicky products. Because all of a sudden everybody's now holding treasuries that don't yield much, and they're holding gold at year highs, and they got to ask themselves why if nothing really comes to pass. So doesn't mean we can have something come to pass, but that's what we got.
What's interesting on the gold end is last week I put up a blog, I think last Thursday, where all the skew angle was like on the call side. It seemed like nobody was concerned about downside. And I was looking at the same chart going out using the weeklies all the way through late August. And now you're starting to see a little bit of increase in skew to the downside on the put side. So I wonder, right along the lines of what you just said, where people are owning gold and they've got it at, this year's highs, if maybe some people are maybe not necessarily taking the position off, but started hedging the position a little bit this past week.
Yeah, I was noticing that a little bit as well here. I was pulling up some GLD data. Obviously, we have the COMEX Gold volatility skew up here in front of us as well in the show notes. And COMEX Gold, you can see, we were talking last week, it was all calls all the time. Puts have kind of started to come back in, kind of referencing what you're just talking about there, Russell. People have started to actually not come up, I should say, because people are actually loving themselves some puts now. Looking at GLD skew, which is what you were talking about last week, Russell, and it's right back down a little bit. It's right about south of the 50th percentile going back 50 days or 52 weeks here. So right about middle of the road from a skew perspective. A lot of that, of course, probably coming from the fact that those puts getting a little bit more love than they have last week and kind of shaping up the skew a little bit that way. Crude oil kind of still similar to what we were talking about last time. Near term, notwithstanding, where there's some call love. Aside from that, it's pretty much all puts all the time. Kind of not quite as sharp as it was, about a year ago looking out the skew, but still puts leading the dance out there as we're talking commodities out here. And real quick, I want to make sure some of our listeners have some fun on the show too. Let's dive into an abbreviated volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, folks, we'll get right into it. We got a timely question here, or maybe not so timely. Maybe last week would have been better. This one comes from listener, goes by the handle Vegas. I like it. He writes, regarding VIX, we were at all-time highs in the old ES when we made the top of the yearly range, and VIX was at a low level. So, that pretty much is how VIX usually works. Around 10, he says. I'll have to go check those numbers, but that's what he's saying. He goes on to say, now we're higher, and VIX can't break 13.5 to the downside. What's the deal? I kind of feel your pain there, Vegas. That's why I say maybe your question would have been better about a week ago, because that was certainly the case as of last week, it seemed like 13.5, maybe down around the 13 handle. Those were kind of serious floors for VIX. We kind of speculated on that last week's show. It seemed like some of the saner heads out there were prevailing, saying, yeah, we're not really too enthused about blasting away at vol at these levels, given all the things that are still on the horizon. And of course, this past week put the lie to that. Like I was just saying, we broke down to about I think 1227 was the low for VIX Cash this week. I'll have to pull it up to make sure, but either way, well south of the of that 13.5 level. Yeah, 1227 actually this morning was the low for the week out there. So yeah, all that 13.5 level seemed to be holding up right until it wasn't a couple of days ago, and then it kind of just gave up the ghost. As we're finishing up the show here, we're back south of the 13 handle on the VIX Cash, right around 1297. So we'll see if we even end the week south of 13. But I'm kind of with you. Maybe you guys have different thoughts, but I'm kind of with Vegas here. I think anything much south of those levels is getting a wee bit silly given all the things we still have to go. I mean, we haven't even really done much earnings season yet. We have, of course, as you mentioned, Miss Yellen still lurking out there. We have the shadows of Brexit lurking out there. So many other things out there that could send us spiraling north from a vol perspective in a heartbeat to really, even, I think, in the words of the immortal Don Schlesinger, Andrew, he'd be saying sell or don't sell. I think he'd be saying don't sell right now as well. What do you think?
I think so too. I think the big thing is, don't forget, VIX is also, it is a complicated animal as far as what it actually is, but it's also a simple animal, meaning VIX is a collection of implied volatilities, right? And implied volatility is a reflection of the realized vol and realized vol in the future, right? Or volatility in the future. We have just had a pretty extreme realized vol period over the last 2 weeks when VIX hit 10 when the index was at an all-time high last week. Remember, we just kind of crawled up there for a couple of months. So a big part of VIX is contained realized vol volatility under vol expectation going forward. So VIX is high because the realized vol that we just had was really high, and there's really no guarantee that it's going to go down even though the index has ripped to this level. So the conditions that created the high last year and the high this year, I think, are both very different. I think that's the price difference.
There you go, sir. Breaks down pretty easy when you look at it from a realized vol perspective as well. You're right. We've just been moving. I mean, that's also, there's at a certain point, you can't really crush it too much lower. Not that they haven't surprised us with that fact, but still, when the indexes are moving, you can't really crush it too much below. Anything to add, Mr. Rock Lobster? Excuse me, Mr. Too many R's again. Anything to add, Mr. Rhodes, before we move on to the crystal ball, aka the embarrassment phase?
No, it's a matter of the environment that we're in, and last year we were breaking 13.5 quite easily, and nobody really thought an awful lot of it. So just the fact that people are kind of focused on a higher low for the markets. As he's asking about 13 instead of asking about us breaking 12, which would have been the exact same question 12 months ago. Would have been, why isn't it below 12? Well, people are actually concerned about a higher low this year, and that's because we have moved into a higher volatility environment.
Speaking of moving, let's move on into our final segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. This is the portion of the show where we just embarrass ourselves wholesale, which is always quite fun. As of course we try to predict where VIX Cash, the ever mercurial VIX Cash, will settle out next Friday, or actually right around this show times, really, when we usually do it. And as of right now, VIX Cash hovering about 12.91. Mr. Greasy Meatball taking the easy route last week. He said it was pretty much going to be unched. We were right around that mythical 13.5 level, so he picked 13.5. And it worked out in his favor because he was the closest. Well, we all went over, so not closest without going over. By Price is Right rules, we all lost. But by closest, the Greasy Meatball takes it by a hair this past week. I was a little bit more. I thought there'd be a little bit more juice. That kind of maybe that speaks to some of my biases out there. I thought there'd be a little bit more juice. I thought coming into this, I thought still some of the unknowns lurking out. I thought earnings kicking off would give us a little bit of some juice back. I was saying not high. I was saying about 15 level, but we couldn't even make that this week as we just outlined. Russell was the buyer. Was the buyer. He was 16, the ever approximate 16.27. So he's always, Mr. Russell, always quite on the nose with his prediction. So all of us lose. So I guess Mr. Greasy Meatball isn't here, but you get to fill his chair this week, Andrew. So you also get the joy of winning his prize, which is you get to go first for next week because Mark came the closest. So go for it, sir. Have fun.
I will ride the Greasy Meatball's coattails and say 12.25 for VIX next week.
12.25. Okay. I'm putting you down for it as we speak. And then in order, the next closest was me, so I shall go next. I know I've been riding this a little bit more elevated VIX bandwagon for a while. Not as much as Russell. Russell's been buying ball for days, or for months, I should say. But I've been a little bit less in that range. I thought more of Goldilocks porridge level, but yeah, I still have a hard time. I kind of see where you're coming from, Rock Lobster, and I probably will be proven wrong again. But I'm gonna stay right around here. In fact, I like that level our friend was talking about before, the 13.5. I was talking about on the show last week. I think that's where Mark jumped on it from. So I'm gonna go back to that level. I'm gonna say 13.5. Just because I like that. I'll go a little bit low. I'll go 13.25. That way Mark can't complain that I was helming in on his level from last week. All right, so 13. We got 12.25. We got 13.25. I put that actually down for Russell. I should probably move that. And then Mr. Russell, Mr. Betty Boop, what are you feeling for next week? Let me guess. 32.
Oh, 13.51.
Oh, I see why he wants that.
I'm tired of not winning.
So you can go 13.26 if you want to go really try. I moved mine down to 13.25, so you can do what you like.
No, 13.51.
Okay, so we got a pretty.
I'm giving you a quarter or 26 cents.
Yeah, give me a nice 26. I'll take it.
Yeah.
All right, there we have it, folks. What are your thoughts on the week to come from Volatility? Let us know. But unfortunately, we've come to the end of yet another fun episode of Volatility That Views. That theme means it's time to go, but before we go, really quickly, let's check in with my cohorts on the Volatility Views panel, see what's cooking with them. We'll start with you, Mr. Rock Lobster. Tell us a little bit about what people can. If people still want to be in Chicago next week for your great professional trader summit, where should they go? What should they do?
Go to our website, or actually send me an order to Andrew at optionpit.com because the event is closed officially on our website. But we'll try to squeeze you in if Mark and I like you and deem you worthy to go to our event. But we probably have a spot or two. You probably get to meet Russell. You get to meet you get to meet lots of cool people. We have a lot of good events planned. Besides just all the fun and food, you actually get to meet real trader type people. And on July 30th, we have a commodity option trading course for our Saturday class at Option.
There you go. Check it out. Optionpit.com. And Mr. Rhodes, you are on the road, quite literally right now. But in addition to donning all sorts of questionable costumes, what's coming up in the realm of the CBOE Live Vol and, of course, over there at the Institute?
I actually I'm speaking Wednesday morning at the event that Andrew just referred to. I'm going to talk about consistent short volatility strategies. It'll be the first time I've done this presentation, so I'm looking forward to that. And then I actually have to go out and see the guys at Live Vol on Thursday. So I'm going to be heading to the West Coast next week once again.
You should tell me you talk to them. We should put together an exclusive Volatility Views summary. People can come in, click on it, and they can get kind of a full breakdown of all the fun stuff we talk about on the show. They can follow along. That'd be kind of cool, actually. I like that idea. Put my vote in for that.
That is on the to-do list now.
There you go, officially on the to-do list. So if you're not a Live Vol user, check it out. You should be. We use it all the time here on the show. Live Vol Pro is probably the one you want to use for all the tools. Check out livevol.com, livevol.com to learn more. And on behalf of the Rock Lobster and Mr. Betty Boop / corner office, and indeed myself, I want to thank all of you out there, listening audience, for downloading and streaming and subscribing to the show. And of course, for all of you who tuned in live, we love you guys too. And we'll see you next time right here on Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.